Hello and welcome back to the UKSIF Leadership Podcast. I'm Sally Kramers, delighted today to be bringing you a special episode on our newest, at least at the time of our recording, policy work. We're delighted to launch our report on unlocking UK pension capital for sustainable growth, recommendations from UKSIF's pension review. The Chancellor of the Exchequer, Rachel Reeves, announced the UK government's pension investment review's interim report on the 14th of November 2024, last year. This review proposes a massive consolidation of the UK pension system and other big changes to how the system works. Since then, Warwick Thompson, our head of policy and regulatory affairs, has been working extremely hard to gather industry views and produce our own pensions review, which is what we're launching today. And thank you, Oscar, for joining me. You can talk about this in a lot more detail.
It's great to be here on the podcast again with you.
Excellent. Perhaps we can start at the top. Why have we done this review of pensions? What are the main objectives? What are we trying to get out of it?
Sure, thanks, Sally. So, I think above all, with this review, we're really looking to address the absence of sustainability and climate change from discussions in the pensions investment review so far. So, if you cast your minds back to the launch of the call for evidence in September last year, this really set the parameters for the first phase of the government's review. There was very little, if I think no mention of sustainability topics at that point. And I think that has really kind of set the tone seemingly for this whole first phase of the pensions investment review. And I think we certainly have fears that, will this ambition still hold true in the upcoming second phase of the review? I think kind of more broadly looking at beyond the kind of initial launch of the call for evidence, there has been that lack of discourse from our point of view in terms of the economic opportunities that can be really realised through mobilising high levels of pensions capital into the UK's transition. And that's in terms of the potential for pensions capital to be put to work into clean energy projects, climate solutions, but also into some of those hard to debate areas of the economy that we know need that policy support in order to transition. So really there we're talking about the role of pension schemes in promoting the transition finance market in the UK. So it's those sorts of discussions in terms of grasping the opportunities from net zero economy that's really been missing, we think, so far from the scope of the pensions review. Linked to that, Sally, we do see a lot of untapped potential for pensions capital in the UK to drive forward sustainable and long-term growth. We are in a really good, enviable position as the UK. We have a leading pensions market globally, now worth around 3 trillion in total assets. And I think certainly there's more we think at UKSIF that can be done to support the role of pensions in driving forward the transition and crucially helping close the investment gap that we know needs to be addressed in order to deliver net zero. So the financing gaps across different sectors of the economy are considerable. The CCC has said on a number of times that the additional capital that's needed across different sectors of the UK economy needs to grow from around 10 to 15 billion a year currently to around 50 to 60 billion a year through the late 2020s and 2030s in order to deliver on our net zero goals. And we do think some of this can come from the UK's pension sector. There is that strong investor base willing to make those long-term investments in the transition, but still there's that lack of that clear supportive policy vision that can really support pension schemes' core purpose and their fiduciary duty ultimately in seeking good risk-adjusted returns for beneficiaries. So that's a little bit of context to why we decided to do this review. Last thing to say, Sally, is that it's fairly new work for us at UKSIF for the last few years. This was definitely a kind of new piece of new program work for us here in the team.
Brilliant. That's a really helpful overview of why, but perhaps I can start with a what. What are the main areas that we covered in this review?
Of course. So there's a fair amount covered in the review report that we've launched. So I guess this is very much linked to what I was just mentioning to you, Sally. We talk a lot about the opportunities to leverage higher levels of pension scheme capital into the economy, including into those kind of productive areas of the economy. So, in this section of the report, we talk a lot about the importance of careful policy design of the new public financial institutions, and that includes GB Energy and the National Wealth Funds. In this respect, we talk a lot in the report about the need to communicate in the long run how I guess exactly they intend to work with long-term private capital and highlight up front the types of capital that they're looking to mobilise into certain sectors of the economy, because different types of pension schemes naturally will have a different risk appetite into different sectors. So getting that kind of tailored approach right there is going to be really important for policymakers to consider. Separately, we talk about mandation. So this is this idea that's been mooted so far in the first stage of the review by certain kind of groups, that a portion of UK pension schemes assets, so part of the portfolio, would have to go towards UK-based investments. And alongside a number of our members in the sector, we continue to have strong reservations about this sort of approach and the risk specifically this could bring for pension scheme beneficiaries. We talk in the report around the risks of crowding in capital into a limited set of investable opportunities in the UK. And instead, we talk about the need to address fundamentally some of the systemic investment barriers that impact both pension funds, but all types of investors that UKSIF works with and brings together. So yeah, we definitely have strong views, restating our position and some of the reasons why we don't want to see mandation adopted as a policy approach in the pensions review. The second area that we look at is building greater resilience in the UK's pension system. We talk about, having really fundamental, long-lasting reforms, such as changes to auto-enrolment, and also we talk about some of the changes that we think are needed in terms of the pensions gap in relation to gender, which we know continues to be a massive issue. So, the figures that we cite in the report, that notes that women on average are retiring with total pension savings of around £69,000, compared with £205,000 for men. So yeah, the gap is really start there. We've got to start to make progress in addressing that gap, and we feel the pensions investment review from the government is really well placed to look at some of those long-standing issues there. A third area that we look at is the role of pension scheme trustees and independent governance committees in navigating the transition to net zero. Here we talk about the role of regulators and providing that confidence through new regulatory guidance for both of these groups that takes into account systemic risks that we know are going to have an impact on long-term investment returns. We also talk about the need for clarification to fiduciary duty for occupational pension scheme trustees. This is a long-standing call that we've been pushing for at UKSIF and alongside other groups for some time. So, we do hope to see progress made here. There are some other groups talking about this. We feel there is some momentum behind now in this debate, perhaps more so than, say, 6 months or even a year ago. So yeah, we think there's a really good opportunity for the review from the government to really take this debate forward. And some of the listeners might have heard the new pensions minister sort of make some hints that maybe this will be looked at. So yeah, I don't want to be too hopeful, Sally, but we might see the minister look at this area. There are kind of few signs there that maybe something could be happening. And the kind of fourth area that we look at is the regulatory environment, and we split this up really in terms of the sustainable finance architecture for pension schemes and then the wider regulatory environment. So in terms of the sustainable finance architecture, we talk about the need for a new industry-led task force that would really look to streamline reporting rules when it comes to sustainability for pension schemes. So very much, acknowledging the reporting burden that is impacting a lot of our members across the space, and really, if we can get that streamlining in place, does this allow for greater conversation for us to have in the sector around more forward-looking decision useful disclosures. So we really emphasize as part of this the need to consider strategic robust transition planning and also adopt the international sustainability standards board standards, so to get that kind of common ground baseline for sustainability related financial disclosures. So yeah, that's on the sustainable finance and architecture piece. In terms of the wider regulatory environment impacting pension schemes, we look to really provide, I guess, what you'd say is a sustainability lens, a perspective to some of the wider reforms that are taking place that we feel has been missing so far from the debate. So we talk about the value for money framework that will be adopted by both FCA and the pensions regulator. We talk about pension scheme consolidation that's taking place more broadly. And then also we talk about some of the DB surplus extraction changes that are also taking place. So yeah, really looking to provide, I suppose, that kind of sustainability lens to all of these things, which really does sit within our kind of area of expertise at UKSIF. So yeah, that's a very quick run through of some of the things that we cover in the review. And obviously lots more can be found in the report that we've launched.
Yeah, of course. If listeners want to read it in a lot more detail, I have linked it in the description of this podcast. But if you would sort of look at the top lines, Oscar, what are the main recommendations where you'd hope to see really quick action and progress from policymakers?
Yeah, sure. So I think I touched on this before, but I think there are real opportunities, I think, to deliver fundamental, long-lasting reforms to auto enrollment in the UK. I think when the review was first mentioned by the government, I think this was cited by the Chancellor, I believe, as one of the kind of key priorities for financial services. I think this was always really the idea was always that this would really focus on pensions adequacy, and as part of that, looking at changes to auto enrollment. I think it's disappointing to see the second stage of the review pushed back, and seemingly, this discussion on changes to things like minimum contribution levels for auto enrollment. We're seeing that kind of pushed into the long grass, perhaps. So, yeah, I think we do really want to see progress here. Um, from our point of view, I suppose to kind of answer your question, I guess it's more a case of hope than an expectation at this point in terms of will we generally see an open discussion around adequacy, and our fear very much is that if it doesn't happen now, then when will this discussion happen? We don't have pensions reviews very often. In this country, it feels like almost like kind of a once in a generation time. So yeah, I think the stakes are really high here, and I think we do really want to see this discussion take place. But of course, doing so in a kind of way that builds a coalition, so brings together and is works for the pension sector, but also can work for employers and lower income households as well. So I think careful policy design is going to be really important there, and I think there's lots of safeguards and other measures that we propose that I think can address some of those cost of living concerns for savers and also employers at an uncertain economic time.
Thanks, Oscar. I'm going to ask a slightly annoying question that I'm sure policy people hate to have asked. What areas aren't covered in the detail in the review that you didn't have a chance to explore that you would have liked to have gone further in?
Yeah, I like that question. I feel when you're always writing a report like this, there's always so much that you want to include, but just because of the nature of these reports and things, you always have to leave things out inevitably. But yeah, I think investor stewardship maybe is an area that we would like to have talked about a bit more. We do discuss the UK Stewardship Code review in the Sustainable Finance Regulatory chapter of our report. Specifically there, we talk about, I guess, the model that some of the proposals as part of the code consultation offer in terms of helping to streamline certain regulatory initiatives when it comes to sustainable finance, but still ultimately adopting that kind of high ambition approach. So yeah, some of the kind of direction of travel from the code, withstanding the conversation on the definition of stewardship, which we won't get into now, by and large, the proposals in the code consultation are pointing in a good direction of travel. So that's all we really touched on in our review in regards to investor stewardship. We do, though, have an upcoming report on systemic stewardship. So yeah, that's a report that we are doing with one of our members, and that will be out in the next few months. So we'll definitely keep an eye out for that. A couple of other areas that we would like to have talked about, but we just didn't have a chance to cover in detail in the review of financial education. I think that's still a really important area where I think we need to have more of a kind of conversation around, and hopefully some of that will come out in the next stage of the pensions review. Emerging markets and international development is another one. So, how can we encourage pension funds to, at least consider allocating, high levels of capital to emerging markets, and ultimately helping bring, all these developing economies with us on the journey to net zero. And I think there's definitely more that we could do there. So yeah, those are some of the areas that are perhaps missing from this report.
Thanks, Oscar. What now comes next with government's pension investment review, the second stage of that? Where are we going on their research?
Yeah, so I think I would expect a lot coming out of government on pensions in the next few weeks. And I mean, even by the time this podcast is out, Sally, we might have had a raft of things come out because things are just moving so quickly, particularly on the pension side of things. I think what we are expecting quite shortly is the final report to be released from the government from the pension review's first stage. So we've had the interim report that's out already, but this will be the very final report. And we're expecting that out quite shortly. Alongside the final report from the first stage of the review, we're also hoping to hear details of the second stage of the review. So I mentioned earlier, Sally, that the second stage was postponed. a few months ago. So, hopefully we will get clarity in terms of that second stage. And maybe alongside that, a consultation on some of the areas that might be looked at as part of that. The pension schemes bill, that's still expected at some point. I understand that should be laid in Parliament sometime over the summer. And the bill itself is expected to include details on a few things. So, one is the value for money framework that I mentioned earlier.
Yeah.
Linked to that is pensions consolidation measures in the sector, and then finally, we're expecting more detail on the proposals to unlock surplus capital from defined benefit schemes. So, yeah, those are some of the things we're expecting from the pension schemes bill. And there's a chance that we might see some other things tacked on to the bill in the form of amendments from parliamentarians in due course. So, yeah, we might have to expect a few curveballs in the process of the bill, which, that can often happen in Parliament. Otherwise, lots of talk at the moment around the voluntary Mansion House Compact being amended or updated in some form. So, this is an existing voluntary initiative from the UK government that is supported by some UK defined contribution pension schemes. We might see some changes to the existing targets that are incorporated in the Mansion House Compact in regards to private markets investments. So that target is set at a level that's at least 5% of your portfolio. So yeah, we could see that amended potentially. And also, could we see more disclosures also required of UK DC schemes signed up to the compact in regards to their investments in the defence sector? So, we've seen a lot of chat around the role of investors, particularly sustainable investors in the defence sector in the UK. And it's interesting to see some of those political considerations there coming potentially. Coming into play in these debates on the pensions review. So, that's a kind of another aspect to this conversation on pensions that we've picked up in the press and through our stakeholder engagement. So, certainly a huge amount to come in this agenda. And maybe a final thing to say, Sally, is that we really do hope that this review that we've published today can be a useful contribution towards the government's second stage. We appreciate a lot of the recommendations are much more kind of longer term and are kind of deliberately ambitious. But I think at the same time, I think now is the time, I think, to have the sense of urgency, to have the high ambition when it comes to these proposals, to really build that more resilient and sustainable pension system and make sure that can deliver for millions of pension savers, and also ensuring that pensions is playing its role in addressing the issues that we face when it comes to climate change. So we're really pleased to get the report out here. And now I suppose that the hard work now begins to kind of get some of these ideas out into the debates and continue to work with our partners and members to really socialize some of these recommendations here. So been really good to get support from a lot of our members and other groups as well. Really grateful to everyone who's fed into our pensions review. It's really appreciated.
And as the space develops, our listeners might get a few more sort of emergency podcast episodes, as we are wont to do here at UKSIF when there's a big development. But for now, Oscar, thank you so much for all the effort and time that you've put into the report. Thank you so much for this overview, and thanks for joining me.
Thanks, Sally.
Of course, as mentioned, we've linked to the full report in the description of this podcast, but I hope listeners have found this overview episode really helpful. You can find us on most social media at UKSIF, so if you want to stay up to date with the wonderful policy work that Oscar's been working on, the upcoming reports that he's mentioned, or what's going on with UKSIF more broadly, then just drop us a follow, join our mailing list, click that subscribe button. Thanks for joining us.